Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over the datasets and the SPY for June 18th, 2025. And with that said, let's go ahead and jump straight into it. This is a new microphone. If the sounds off, just let me know in the comments and I'll try to adjust it accordingly. It's going to probably take a few videos to get it perfect. So, let me pull up the data. There. Okay. So this was today's data. And let's just quickly go over it. So I talked about how last night we were expecting very cool export and import prices as the forecast was expecting, but we did not get as cool. Um, of import prices at least, but we did get extreme heavy cooling in the export prices. It was only forecasted to have a negative 0.1%. We got a negative 0.9%, so very high. Let's see, the core retail sales were very down. They were expecting, obviously they were expecting down, but not this much. Let's see, industrial production down. The Atlanta Fed GDP has been dropping very drastically, and obviously that's going to be because of the export price right here. That export price is going to heavily weigh on the GDP now. And again, as I mentioned, you can use the export and import price to basically plug it into a formula to weigh the GDP now, and that's essentially what happened. So we have the 5 years TIPS auction. That doesn't matter. The yields came in lower. That's expected. Let's see if I missed anything. Nope. So very cool data we had today or yesterday, depending on when you're listening to this. Now, let's see. I have to swap this back over. Wednesday, the 18th, we have all of our. Let's see. We have our data that we're supposed to have on Thursday. We're going to be having it today on Wednesday because on Thursday it's Juneteenth. Week late, but it's okay. Um, with that said, at 8:30 in the morning we have the jobless claims, which is again a weekly data set every Thursday. So let's see, forecast. They're expecting pretty standard prints right now, but even then, this is still starting to get elevated. Once you hit that 1.9 million mark on the jobless or on the continued jobless claims, things start getting a little dicey. Now, it's not at the 2 million yet. That's when alarm bells really start triggering, but it's starting to climb up. So that is a concern to have, and I'm definitely going to say that that's probably going to start weighing on the unemployment rate in the future here. Now, housing starts doesn't really matter too much. I don't track that. I do track some of the ETFs following housing and retail, but um, I that's not what we're here for right now. Crude oil inventories doesn't matter right now. We already know the Atlanta Fed GDP is going to be down. Yesterday, Tuesday's data showed that, so that's nothing new there. And then what the important data is FOMC. That's at 2 p.m. And at first it will be the FOMC statement and rate decision. And again, based on the CME FedWatch, which is like pretty much the most accurate tool out there that we have to determine if the Fed's going to cut rates or not, pretty much has a pause at 99% priced in. So that means that it's really not going to. It'd be very unlikely to see a rate cut or anything crazy tomorrow. So very likely we're going to be seeing the pause. Nothing too crazy out of that. Now, what I'm looking for is out of the statement, I'm going to be looking for any changes in verbiage from the previous statement, the previous one or two statements that the FOMC released, and we will, determine if any changes are important there. Now, what's really important is Powell's speech at 2:30 p.m. and that's going to be the press conference where he basically goes over the FOMC statement, talks about him and his colleagues, blah blah blah, and then he discusses with reporters or the press going over questions they have. Usually they ask pretty good questions. They usually send I won't say they're best people, but they send pretty decent reporters to ask these questions. So usually they can ask questions about treasuries and other key economic factors, and that's generally why we will get such massive market moves when Powell is speaking, because he does get sometimes cornered into some of these trickier questions. So we'll all be watching Powell's speech tomorrow. That's kind of the big thing of the day. Besides that, again, there's no major earnings this week. And then on Thursday, it is going to be a holiday. Just a reminder, the trading day tomorrow will be standard. So it will be a full trading session. It will have the after-hour session, but it will not have the overnight session. That's the only thing it won't have. And then obviously it won't have the pre-market, the intraday and the overnight, or not the overnight, but the after hours on Thursday. And then the overnight will be kicking in Thursday evening, Friday morning. So that's that. I think I covered all data. Let's go into the next part. Just a quick reminder before we get into the technical analysis. If you've been finding value in my insights, consider joining my Patreon. For just $12.99 a month, you'll get access to my trades, courses, and powerful tools to help you grow as a trader. I'd love to have you be a part of our team and community. And it's less than 43 cents a day. So if you'd like to join, click in the link in the description. Thanks. And getting into the technical analysis, as always, let's go ahead and open the daily time frame. Let's go ahead and view our moving averages and Bollinger Bands. And just from what you can see visually, I keep my Bollinger Bands as a thick white line, kind of as like the side of a road. At least that's how they are in America. I don't know how they are everywhere else, but generally the sides of the road have like a thick white line. So when our roadway is opening up, that generally means the market's preparing and posturing for a very large move, either upward or downward. Now, as you can see, our road is starting to really get thin in here, and that's not a bad thing. That just means consolidation. That can be, a very standard pattern when we're going through the market. So I just want you to be aware of that. This can be something standard. If we're going to continue upward, we can hold a pretty tight channel. So many people have been bringing that to my attention, but this is something that you don't have to really worry about right now. This just means that the market is kind of taking the volatility out again. It's entering back more into a standard market. When the volatility does start kicking in, the Bollinger Bands will be, expanding more to show that, there is that room to the downside and the upside, potentially. But right now, the Bollinger Bands are just saying that we are starting to enter calmer waters, and that's that. So, okay, getting into the important numbers. The market closed today at 597.53, and the 5-MA is currently at 646. So the 5-MA will be pulling down very, very, very likely close to that 598.30 range, give or take, which means that if you've watched my videos or my content and you understand how I analyze the 5-day moving average, there is the upper bounds and the lower bounds of the 5-day moving average. Essentially, today we traded in the lower bounds of the 5-day moving average for the entire session. And currently, the overnight and the after hours are trading in that area as well. So this is just a standard part of trying to push away from the 5 mile, kind of like a magnet. I discussed this before. Either the market is going to gravitate and attract towards the 5-day moving average, or we're going to see it start repelling away from us and pushing us away. Um, Potentially, we're seeing that push where we're going to bounce against the 5-day moving average itself and push downward. That's what I'm kind of expecting here. But just we are still within the 5 mile range, so be aware of that. That doesn't mean that we're going to fully reject here. Potentially, we could test this as enough liquidity to push back upward. So just be aware that of this in this range that this doesn't mean the market's going to absolutely start crashing right now. Okay, so enough about that. So okay, we're expecting the 5-day moving average tomorrow to be around that 598 30-ish range, give or take. It does depend on where the pre-market and the open is at. If it's around this 597 range, 596 range, then we will be seeing the 5 mile being around that area. But if it somehow starts filling gaps upward and it starts pushing towards that upper bounds of the 5 mile, closer to that 599 600 range, then potentially we could be seeing the 5 mile opening very close to that 599 area. So just make sure you mark where the 5-day moving average is opening up. I don't know why I'm calling it the 5-day moving average. I always call it the 5 mile. Okay, so the 10 mile is at 599.32. That does mean that the 5 mile is going to be pulling underneath the 10 mile on open tomorrow, which technically that's the first bear signal. That's the first thing saying our short-term trend is starting to pull under our medium-term trend. So that's the first bear signal you have when you're looking for a trend reversal. And again, I will preface that I'm still bullish overall, but I am expecting support testing. The 20 mile is at 593.91, and as I mentioned, it's going to be slowly pulling up to that 594 range, which means that the upper bounds of the 20 mile is going to be within that 596 area. So technically, we're already starting to creep into that area a little bit, but we need to fully encroach the range and test both the upper bounds, the 20 mile, and the lower bounds of the 20 mile. So with the 20 mile, very likely going to be at the 594 tomorrow. Again, the upper bounds of it will be at 596, give or take, and the lower bounds will be at 592, give or take. So I will be posting some options based on a test of that level tomorrow, in case we actually do get the full 20 mile test tomorrow. And seeing how we do have Powell speaking, it's extremely likely that we could get that move down, unless we get some overly dovish data that pushes the market back up to the upper Bollinger. I really don't think that's the case right now. I think that it's kind of in both the bulls and the bears' best interest to head downward and test support, build more contracts, and wait for the next big move. So let's go ahead and hide our moving averages and Bollingers. Now, on the daily time frame, structurally, we know that we have been filling out this very large bullish cup. And let's just go ahead and pull up the drawings. Let's see what we got going on here. We're going to delete that. I want to delete that. Sorry, just one moment. This is usually something I should do editing out, but just not how I roll right now. So as you can see, we're starting to build support right around the top of this upper selling channel, which is, a very key range. And potentially this is building support to head downward in the short term to build a handle to head back upward. Again, we're all kind of really anticipating hitting that 5 or that 611 range, but we did not get to that point. You know, we are a full $6 off that range, which, you know, that's a huge amount when considering the S&P and when considering pushing all-time highs. So that cycle just didn't do it yet. What I'm looking for is for the support test downward, build some liquidity. It very likely won't be this massive move down like it's drawn on my chart right now, but you know, just in the thing of expecting a handle downward, we should be expecting some selling within this range, just structurally. But potentially we can still hit that top first before pulling down. So keep that in mind on the daily time frame. Now, one thing I do want you to look at here, which is, you know, a little hard to see on my screen, I apologize, but that is the ADL. And the ADL is essentially the way to track the inflow of money. So if it's going up, money is entering the fund. If it's going down, money is leaving the fund. Well, as you can see right here, we do have a head and shoulders on, you know, essentially the money inflow. And we have been seeing it pull downward. It is still pretty much at almost all-time high levels, but again, it is slowly tapering off here. This can fill right back up. It really isn't that much to, you know, send this back up to, you know, real all-time high levels, but just be aware of that. We are seeing a small pull down in the ADL, which means that, you know, money is actively leaving the fund. Now, let me just look at the hourly time frame really quick. Now, hourly time frame, I want to delete this cup. Hold on. We're going to delete that, and we're going to delete this handle because I want to draw something else. Okay, so we have some pretty bearish structure going on here. And we have the inverse cup. And the way we know we have that inverse cup is because of the bull structures on the bottom. Okay, you always have bull structures to break out the inverse cup. Now, if this is going to head upward, then we essentially need to see bullish liquidity in here, fill this range at this 604, build some more liquidity, and then head upward towards that 606. Okay, and again, that's going to kind of look like a cup and handle, and that's the bullish thesis, is that we are going to break out of this bearish range. But for right now, bears are in control. And what that is going to look like is we will continue filling this inverse cup downward. Now, we have a very key range here of liquidity, and I've drawn this a couple times in Webull, but this is essentially a very large inverse island gap, which means that it's really just free liquidity for the dealers to grab. There is a ton of contracts in this range that they can take very easily, and I do believe they are going to do that. And just structurally, I see that we are going to get this inverse cup filling downward. And just take a look at this smaller inverse cup right here. We do have the bull structure right in there. We do have the bull structure right in there. So again, we do have another inverse cup, and that's what we're wanting to see. We're wanting to see the bearish structure continuing to form to pull us downward. Now, we do have a little bit of bullish structure in here. I am going to try to sneak a drawing in here, even though it'll look bad, but potentially right here can turn into an inverse head and shoulders. That could be the head potentially. It can build a right shoulder, and that can pull upward, and again, you know, fill out that cup and head upward. But I don't think that's going to be the case. I do think that this is going to build a rejection of the 5 mile range in here, and it will pull down and test the 20 mile and, build support, and whether we take this entire range or not, which, it's to be determined, but there is a huge chunk of liquidity that can be taken. And let's just look at the bottom Bollinger really quick on the daily time frame. Let's see where that's at 590 or 579. So this is, let's see, 583. So technically they could grab for that and do a bottom Bollinger move in here. We do have another bit of liquidity right at the 578. So if we do have some massive sell-off within the next few sessions, technically we can pull down and do some massive inverse cup. I don't think we'll have that big of a liquidity to grab, but we will see. But just be aware there are some pretty massive gaps in here that can be taken downward. I do fully anticipate this range to be broken. I do expect us to pull downward slightly. Whether it's just to test the 20 MA, we will see. If it's going to be a 20 MA test, then this will turn into a bullish cup in a range like that. It will form some sort of handle and it will break out. Okay, that's how that will form. That's more of what I expect the bullish thesis to actually happen. I'm more so in that boat of I do expect that major 20 MA rejection to the upside. So that's where we will set up longer term contracts. I generally try to set up about 2 months out when we get a good 20 MA test. So yeah. Okay, I'm gonna stop rambling now. That is enough of that. I do believe I have highlighted both the bullish and the bearish thesis on multiple time frames. And I have covered the moving averages and everything, so okay, I think we're good here. Everyone should be pretty much on the same page. We should expect that move down to the 591.82. That would test the 20 MA perfectly. That would actually go underneath the 20 MA in the lower bounds, give us enough liquidity and pop upward. So, if you're not in the Discord, I apologize, but I will be posting a list of options to take to straddle that range, both on the upside and the downside. The last few times I've set up those contracts, they have, for the very vast majority, been, majorly green. So that's $12.99 a month for that one. I hate to advertise, but help me help you. Let's work together. Okay. So have a good night, everybody. I will talk to you in not tomorrow's video, but tomorrow evening's video for Friday. And just remember, Friday is SPY X dividend. So we are expecting a full $1.70 at the very minimum off the very top of the price. That is going to be OPEX as well. So it's going to very likely be a pretty bearish day overall, especially with how hard we've been rallying. The VIX has been very pinned. There's a lot of conditions that can really set this off. So yeah, have a good day. Enjoy your Juneteenth. And I will talk to you in the next one. And yeah, have a safe trading day. Take care.